Ladies and gentlemen, good day and welcome to Solar Industries India Limited Q4 FY'24 results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, sir.
Thanks, Tushar. Good morning, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host the call. From the management today, we have Mr. Manish Nuwal, MD and CEO, Mr. Suresh Menon, ED, Mr. Monish Agrawal, Joint CFO, Ms. Shalini Mandana, Joint CFO. Without much ado, I would hand over the call to Ms. Aanchal from Solar Industries to take this forward. Over to you, ma'am.
Thank you so much, Amit. A very good morning to our dear stakeholders and well-wishers. My name is Aanchal, and I would like to welcome you all to the concluding conference call of FY'24. To begin with, I would like to remind you that during this call, we might make projections or other forward-looking statements regarding future events and about the future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all the relevant information timely. Now I would request Solar's CEO and MD, Mr. Manish Nuwal, for his opening remarks. Over to you, sir.
A very good morning to all our valued stakeholders. We are pleased to close FY'24 with the highest ever quarterly and yearly profits at 243 crores and 875 crores respectively. The turnover of the company stands at 1611 crores and 6070 crores for the quarter and year respectively. In FY'24, better performance in domestic business and increased defense sales help us to expand our margins, resulting in the highest ever EBITDA and profit after tax in absolute terms for the year, which is at 1414 crores and 875 crores. These results are being achieved despite the losses from currency fluctuations and hyperinflationary condition, which is causing because of the interest rates, which has resulted into a revenue loss of around 300 crores in this quarter and 900 crores in the whole year. And we incurred EBITDA losses of additional 40 crores in this quarter and 150 crores in the year as compared to the previous year. This kind of performance reflects the strength of the company and its management. We are satisfied in sharing the fact that the defense annual revenue has crossed 500 crores plus for the first time in any financial year, although it is little lower than our annual guidance. Our defense order book now stands at around 2600 crores and we are expecting big orders in the coming quarters. As a result of these orders, which we have and expected orders, we are expecting the defense revenue to grow threefold in FY'25. Our business goals are well aligned with the country's ambition to make India Atmanirbhar in the field of ammunition and emerge as a major export hub in the coming years. The domestic explosive volume in this quarter grew significantly by around 24% and 20% in the whole year, which is mainly because of strong growth from mining and infrastructure sector and recent acquisition of Rajasthan Explosives. The domestic explosives order book of Coal India and Singareni stands at around 2500 crores. We are entering FY'25 with an optimistic outlook on our business. The continued momentum in the domestic market is likely to help us to increase our volumes by 15%, and international business should also do much better than the previous year. We are expecting defense business to rise significantly, and it should become around 20% of our annual revenue for the year FY'25, which is currently at 9%. Based on this background, friends, we are expecting the top line to show a growth of around 30% and EBITDA margins to improve further from the current levels. Looking at the upcoming opportunities, we have planned CapEx of around 800 crores in FY'25. Our company has also proposed a dividend of rupees 8.5 per share for this year compared to rupees 8 in the previous year. Now I will hand over the call to Aanchal to take you through the financials. Thank you.
Thank you, sir. Before beginning, I would like to quote, this year has been extraordinary in Solar's history, where we have achieved milestones despite the challenges quoted by our MD. Quoting a few of them again, highest everly EBITDA at 1414 crores and PAT at 875 crores. Defense order book stands at highest level of 2600 plus crores. Huge capex plans around 800 crores. Strong return to our stakeholders by creating a new market cap of 80,000 crores plus. Needless to mention, keeping the continuous foundation of sustainable growth ahead for our stakeholders. We have shared the investor presentation carrying all the necessary information for your perusal. Hence, we will discuss the same very quickly. Key highlights for the fourth quarter and year to be taken together. Sales. The consolidated revenue for the quarter is 1611 crores versus 1929 crores, and for the whole year it is 6070 crores against 6923 crores. Our explosive volume for the quarter and year is increased by 24% and 20% respectively. Initiating systems revenue increased by 7% in the quarter and 13% in the year. The percentage of the sectors and the customer buckets are as follows. CIL is at 15%, non-CIL institution is at 16%, HNI is at 19%, export and overseas at 37%, and defense is doubled in the basket from 6 to 12%. In the year, the basket more or less is same except for defense, which is at 9% from 6% in the basket. And in absolute terms, the same is increased by around 30% year on year. Raw material cost. The consumption of the quarter stands at 830 crores against 1191 crores. For the year, it stands at 3196 crores against 4342 crores. Employee cost for the quarter stands at 119 crores against 99, and for the year stands at 434 crores against 353. Other expenses for the quarter stands at 309 crores against 281 crores, and for the year it stands at 1071 crores against 939 crores. Coming to the EBITDA, we reported quarter EBITDA at 371 crores against 369, showing a rise of around say 3 or 4% in the margin, which is from 19.12% in the previous year to 23.06, despite the challenges mentioned in the beginning of the call. Had those challenges not affected the business, there would have been better margins. We reported yearly EBITDA at 1414 crores against 1320 crores with a margin of 23.29 against 19.07. Depreciation cost stands at 37 crores against 35, whereas yearly cost stands at 143 crores against 128. Coming to interest and finance charges, its quarterly stands almost at the similar level of around 32 crores, and yearly cost stands at 109 crores against 90 crores. PBT stands at 305 crores against 302, with a fantastic increase in the PBT margins, that is 18.96% against 15.66. And for the year, it stands at 1161 crores against 1102 crores, with a massive rise in the margin at 19.13% against 15.91. Coming to the PAT, PAT stands at 243 crores against 221 crores, with margin standing at 15.07 against 11.44. And for the year, it stands at 875 crores against 811, with a margin of 14.42 against 11.72. These were the updates for the quarter and the year. This is all from our side. Now we would be very happy to take any questions, comments, and suggestions that you may have. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you, Manishji, to give me opportunity first. Sir, losses due to currency fluctuation, hyperinflation, we lose 900 crore top line in this year. Will you tell more commentary about this, please?
Yes, sir. So we had reported that we have lost around 900 crores in the top line. This is called a translation loss, because if we see the currency of two of our main geographies, especially Turkey and Nigeria, the currency has depreciated in Turkey by around 62%, and Nigerian currency on an average have depreciated by more than 100%. So as a result, if we compare the sales to previous year's currency numbers, we see the translation loss of 900 crores.
Or whatever investment we are doing in Turkey or other country, you are making losses of that investment also?
No, so that's just a book entry as per Ind AS 29 on hyperinflation and currency fluctuations. So at local levels, if we compare, we are making profits and then business is growing at local level.
It means when we receive the payment of whatever we have sold the material there, then this currency loss will be nil?
So what happens, there are 3 layers of currency conversions. One is the local layer. For example, if we take Turkish lira, that gets converted into dollar terms, and when we report in INR terms at console levels, that get converted into INR. So if you see the currency translation from lira to USD, it's 62% depreciation, but when we convert from dollar to INR, the depreciation is hardly 4%. So it's just a translation loss.
Okay. So another, you mentioned 2000.
Hello? Hello? So you're not on.
The next question is from the line of Nirav from Ask Investments Manager. Please go ahead.
Hello, sir, and thank you very much for the opportunity. Would it be possible for you to help with the volume business that was done across Turkey and Nigeria? If I can get the data for FY'24 versus FY'23, it would be really helpful. Thank you.
So you'll get that in annual reports, and as a matter of policy, we do not declare country-wise data. But on overall level, if we see, we have similar volume growth at international level, around 10 to 15% growth is there. Yeah.
Would it be possible for you to share any guidance for FY'25, because things have been really very, very volatile for our business? Any commentary on that would be really very helpful.
You are asking about international market?
Both local and international. For FY'25, what kind of volumes can we expect across both domestic and international?
Yeah, if you look at our current domestic explosive market and the guidance which we have given, that we should be able to deliver a growth of around 15%. And as far as international business is concerned, since it is a multi-geographic position, so it will be difficult to give any volume guidance on that front. But definitely we will be doing around 10, in a range of 10 to 15%.
Sir, in the domestic side, you said 15% of volume growth, right? Just confirming that.
Yes, yes.
What can be the CapEx number for FY'25?
That is what Anshul has mentioned, that for this year, FY'25, we are planning a CapEx of around 800 crores, and in that defense will be around 400 and explosives will be around 400 crores.
Thank you, sir. My queries have been answered.
Thank you.
Thank you. The next question is from the line of Chirag Muchal from Centrum Broking. Please go ahead.
Yeah, thank you, and congrats for a very good performance in FY'24. So, sir, couple of questions. First, in the defense segment. Can you provide status update on the Pinaka order? Since, Defense Acquisition Council approval had come long ago. So, exactly which stage the order is in?
So as far as that long-term orders are concerned, which we have shared that we are expecting in next couple of quarters, the reason is that because of recent elections, the certain approvals are still on that block list, or you can say that it is in a final stage. But as far as orders or other technical things are concerned, those are clear. And we have also cleared the draft contractual agreements also.
Okay. So this would be, sir, for phase 1 or for all 3 phases together now the order will be placed?
So once it comes, we will definitely share.
Sure, sir. And second related question on defense is that you have mentioned in the press release that you expect some large orders in the upcoming quarters. So excluding Pinaka, which are the other product categories where we can expect large size orders? So I can understand the quantitative details might be confidential, but even qualitatively, if you can just provide some other product categories where just like Pinaka, the opportunities are very large, then that would be helpful.
Yeah. Like we have always been sharing that we are likely to receive long-term orders for supplying Pinaka rockets. Apart from this, we have recently also shared with all the stakeholders that we have received certain export orders. And based on the current geopolitical situations and the vacuum in this market, we are expecting more orders in coming quarters. That is what we have shared. And like you are aware that we have a plenty of ammunition products range, and those can be from any of the products. So it's a wide range, and we will keep sharing as we move forward.
Sure, sir. Sir, a question on our domestic markets realization. So in Q3 and Q4, we have seen realization stabilizing at around 44,000 rupees per metric ton. So for the near term of, let's say, FY'25, what would be the outlook for the ammonium nitrate prices and realization? Can we expect this to also remain stable, or do you expect any material increase, decrease from the current levels?
So if you look at the trends of last 4 years, we have seen that most of the commodities has gone drastically up. And in last year, we have seen that commodity has softened, and some correction has also happened from the bottom level. So as far as ammonium nitrate is concerned, we can't predict the pricing. But if we look at our business acumen or overall level of understanding, we believe that these prices are now at a reasonable or sustainable level. So these prices should keep going on, unless there are some kind of disruption in either gas supplies or international geopolitical situation or shipping problem, which we can't predict anyhow.
Okay. So just to clarify, you mentioned that these prices should remain stable, or from this level they should go up. I just missed that.
So my belief is that these are reasonable and sustainable prices. That's all.
Okay, sir. And sir, last question. So, sir, this is also the year-ending call. So, for FY'24 and also for the near-term outlook of FY'25, if you can just highlight qualitatively the performance of some of our key overseas markets, like Australia, Indonesia, South Africa, etc. How was the performance in FY'24, and qualitatively, FY'25, how it looks like? That would be my last question.
Sure. So if you look at our international business and the scenarios which is happening, we all know that because of the rate increase, which is interest rate increase by most of the countries, people are not finding it easy to handle those kind of situations. So most of the countries are facing difficulties, and India is one of the lucky country which has handled this situation quite well. So if you look at international scenario, because of rate hikes, hyperinflation is happening, and as a result, certain demand slowdown has also we have observed. But all said and done, our company has performed much better if you look at the real ground situation. So in this year, like we have already shared, that we have done sales of around 2457 crores compared to last year 2796 crores, which is a drop of only 12%. And if you look at the normal price droppings, it is more than that. So we have done quite well, and especially in countries where we have also shared that we are struggling from last couple of years, mainly South Africa and Australia. Now those countries we have more comfortable at this moment, and in 24-25, which is FY'25, we should see much improved numbers. So like you are aware, as our policy, we can't comment on each country because we look it as from holistic angle, business as a whole. So I can say that the business from overseas is doing much better, looking at the ground situation, and should do much better in FY'25.
Okay. Yeah. Thanks for the answer.
Thank you.
Thank you. And the next question is from the line of Deepen Vakil from Research Analyst. Please go ahead.
Hello, sir. Thank you for taking my question. So my first question is on your product development front. So recently you had announced that there's a new product coming on anti-drone side, namely Bhargava Astra. So can you give us a little bit more details regarding the product development side and when we can see it getting a user trial approval and maybe start supporting us on the revenue front?
Yeah, what we have always been sharing with our valued stakeholders, that the company is investing a lot in developing new technologies or absorbing the new technologies to develop the new products. So our strategy is to develop the latest and state-of-the-art products which can help the nations to secure its border better. And in line with that, we are keep investing, and we have also shared that we are working on anti-drone systems, and once it develops and once our products are qualified, we will definitely share those details with our stakeholders. As of now, it is in the pipeline, and we are working quite well.
Got it, sir. So my next question is slightly on the ammunition market scenario, sir. So one of your competitors have mentioned that there has been a significant uptick in the ammunition demand from the global perspective. So can you throw some light on the demand that we are witnessing in the ammunition side of it, and what kind of performance you expect from ammunition in FY'25?
So as a matter of policy, we don't comment on what others are saying, but like we have been saying from last couple of quarters, that we are getting huge orders from the international market. And I think that is the reflection of what's happening around the world. And that is what we are saying. And we have also captured in our annual commentary that we are expecting new orders in the coming quarters. I think that should give a clear reflection of what's happening and what company is doing.
Got it, sir. Sir, just one bookkeeping question, sir. Can you give us an overall split of explosives and initiative system and defense in domestic plus international?
So we have already given the sales revenue breakup in our presentations, but we don't give the volume on global, say India separately and global separately, because the product range is quite wide, and it is not wise for us to share all those details in the interest of the company.
Got it, sir. So wish you all the very best for FY'25. Thank you so much for answering my question.
Thank you.
Thank you. And the next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah. Hi, Manish. Hearty congratulations for the year gone by. I think a year of remarkable tumultuous changes, ammonium nitrate price volatility, world like a war zone, which in some sense is beneficial to you. But a lot of volatility in many key metrics, and to manage that and to emerge from it stronger, certainly Team Solar and you both deserve great compliments. Just one or two questions on on the future outlook. Earlier, we have many times discussed that long-term growth is going to be 20% plus in volume terms, and it would remain at that level or better for at least next 3 to 5 years, considering all the various product initiatives, opportunities within country, outside country, defense and non-defense, all applications. And that is something we have felt comfortable again and again. But for the current year, FY'25, volume growth we are saying is likely to be more like 15% domestic and international. Hard to club it all together, but maybe 10 to 15%. But in value terms, you give a guidance of 30% jump in revenue. So, is the volume growth softened compared to 20%? And B, therefore, we expect some firming up of the price so that revenue growth is 30%.
Sir, good morning, sir. If you look at our the guidance, we have said that in this year we should grow by around 30% on top line basis. So if you take the defense out from that, the growth from say around 510 crores to threefold, which will be around say 1,500 crores plus, that is our expectation. If you remove that additional 1,000 crores from defense, it means that around 1,000 crores will come from the core explosive business, which is itself is around 15%. So we believe that these prices, even if you don't go up or don't go down, we are considering the prices to remain at these levels. We are expecting 15% volume rise across the globe. So it can vary. In India, it may go up by 17%. In global market, it can grow up by 12%. So it's a mix of all. So based on that kind of understanding, what we have on our business, we are expecting 15% rise from explosive business and around threefold increase in the defense business, which will help us to grow in FY'25 by around 30%.
Therefore, by implication, defense business would have a better pricing, I suppose.
Absolutely, sir, because like we have been sharing that defense businesses are doing better, although in number terms, we can always say that it is only 510, which is lower than 750 target. So we accept that it is lower than our target. But like we said that because of the supply chain issues on the Red Sea side has deferred the shipments. But those are the business challenges. But as far as pricings are concerned, definitely prices in defense products are better, margins are better.
Right. So I understood. Non-defense part of the business, volume growth will be 15%. Defense will triple in rupee terms. And given the fact that it is better pricing, therefore, overall revenue growth you expect to be 30% in rupee terms.
Yes, sir.
Yeah. And by implication, as you mentioned also, that margins are expected to improve because defense business is margin-rich kind of activity. So that will pull up the margins, or non-defense business also is expected to improve the margins?
We sincerely believe that the margins we are getting from our core business is quite comfortable level or more than a comfortable level. So we don't foresee that it should go up drastically. Even if we able to maintain these levels, then it is quite commendable. Another factor that there are certain territories where we would like to expand our volumes, and there are territories which we were making losses. So in this FY'25, definitely turnaround has already started, so we will do much better in those territories, and we would like to expand volumes in the coming years. So it's a mix of various strategies, but ultimate strategy is to expand volumes and increase our market shares.
Sure. And therefore, satisfactory margins, you would put it as in 20 to 24% range.
For explosive business, we expect around 20 to 22%, and from defense, we have better margins. So business as a whole, we are saying we should do more than the current level, which is around, say, 23%.
Sure. That's what I meant. And one last question, Manish. Over many discussions in last couple of years, you've generally believed that volume growth would be 20% plus. So in the current year, that's a bit of a lower one, but it's I hope it is one-off, and longer-term trajectory for 3-5 years, we are looking at volume growth of 20% plus. Is that correct, or any revision there?
Sir, if you look at our last year's annual call also, you have raised the same question, and I replied to that we are working on volume increase of around 15% plus in coming years on compounded basis, and bottom line should increase by at least 20% on compounded basis. So, sir, based on that, we are actually doing better than that. And if you take last year basis, which was around 809 crores bottom line, so if you multiply and do the compounding, then it should take around 4 years to double up that level. But we fairly believe, based on the opportunities which we are getting and the way we are executing those things, we believe that if you take last year base as 809, so if you multiply or double, then we should do it in 3 years' time. So which is even earlier than what we have explained to you earlier.
Okay. No, appreciate. And once again, congratulations for the remarkable performance in very, very difficult and volatile conditions that the last year represented. Hearty congratulations.
Thank you, sir. Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, congratulations for a good performance in a very testing time for ammonium nitrate prices and all. So few questions from my side. Just wanted to know, because you have upped the capex significantly compared to last year. So, and you are indicating that 400 crores would be towards defense and 400 towards explosives. Is it possible to highlight the particular? I know defense is a sensitive space, but in explosives, where we are expanding, are we expanding capacity at the current space, or it is also to do with some of the greenfield projects that we might undertake?
Yeah, if you look at our capex programs, which we have done over last couple of years, and if you look at the guidance of 25. So the expansions which we are doing at the current mother plant, which is at Nagpur, and the expansions of new facility, greenfield facility, which is coming out around the location which is on Gujarat and Maharashtra border, and the company which we acquired in the last year, which is Rajasthan Explosives and Chemicals. If you combine all these three, and the future additions in our capacities for delivering more bulk explosives. So if you combine all these 3-4, we are expanding our facilities quite aggressively and almost creating the facilities for next 4 to 5 years. So for that, this investment is required. And mainly in overseas market, we are entering into new territories, although investments will not be big. But if you look at our 7 to 8 countries current presence outside India and the upcoming facilities, we need to invest. So for explosives, in combination, we are expecting not less than 400 crores in this FY'25, and defense, because of the huge opportunities coming up, so we have received lot of orders. We are expecting a lot of orders in future as well. So based on those things, we are expanding our facilities to supply more quantities, and at the same time, we are investing a lot in developing new products. So if you combine these two, 400 crores is nothing. In coming years, we will scale up these capex programs.
Wonderful, sir. That's helpful. The second bit is on defense space. So if I look at your order book, what has been understated is the texture of this order book. So our export order book, particularly the orders which are of shorter duration, have gone up significantly. Now, while we expect to receive the order, some certain big orders in the country, will getting these big domestic orders also open up further export opportunities for the similar products?
Yeah, that is what I said, no? We are getting huge inquiries and lot of traction is there, and as a result of which we have already received orders, and we are likely to receive many orders in the coming quarters. These are apart from the programs in which we have already participated for the Indian defense programs. So it's a mix of India's defense programs as well as the export of these products for the markets which is outside India. And that's the policy of our government of India, that we should make our country self-sufficient, and now they are talking about making India as an export hub. But our company is already working in that direction from last couple of years, and in last, say, 23-24, we have seen a glimpse of that. In 24-25, we will see the clear picture of that.
Wonderful, sir. Thanks and all the best.
Thank you.
Thank you. And the next question is from the line of Rohan from Nuvama. Please go ahead.
Manishji, hi sir, good morning and congratulations on a strong set of numbers in such a turbulent time. Sir, my first question is on the volume growth guidance, which you have mentioned is roughly this year looking close to 15%. Sir, I think that 24 year gone by was even more challenging, and with the high TAN prices, explosive prices was even a higher side. Then also we could achieve 20% kind of volume growth in the current year. So just wanted to understand that the weakness which you are anticipating in the next year in terms of the pure volume, while the infra activities and all remain solid. So, and when the Coal India demand and everything is still on track. So just wanted to understand that the reason for looking at a 15% kind of volume growth for the next year.
So if you look at the current situation, we have said that our volume growth will be plus 15% on compounded basis for a couple of years, till if anything slows down or coal mining slows down or infrastructure slows down. So we have achieved 20% volume growth in FY'24, and we are saying 15% plus growth in 25. So if you look at the dynamics of the businesses, weather changes are happening, some slowdown can happen for a couple of months and all that. So it impacts our business. And if you look at the global businesses are also, that last year was the worst year as far as business is concerned in last 3-4 years of time after the COVID. So we are recovering out of that. And if you club all these three factors, and if you keep some bit of uncertainty in any kind of business, so we are giving a fair guidance of 15% volume rise, which is also quite good if you look at the overall growth rate of around 8% in the Indian market.
No, sir, absolutely. It's quite encouraging to even a 15%. I just wanted to understand that the reason for is slightly some moderation in numbers which we are seeing in growth for the year. So I get your point. You are being slightly, conservative and looking at the current environment. So second is,
So Rohan, what happens that sometimes you believe that in Indian markets it is growing at 7%, and how you are saying that you will do 20%. So there are certain bit of uncertainties or more understanding of the business which we have. So based on that, we are saying 15% plus volume growth, which doesn't mean that we will end up at 15. It can be 17, 18, or it may be 20%.
Definitely, sir. Sir, coming on a defense business, though, current quarter has picked up very well and your growth, your guidance for next year is quite encouraging with roughly 1,500 to 1,600 crore rupees kind of revenue. Sir, you are talking about further putting 400 crore rupees capex in the defense in the current year, and I understand that broadly we would have invested close to, so far now, 800 to 900 crore rupees in defense business. Sir, though we don't understand that the defense follows any asset turnover metrics, because here the delta can be quite high. But just to give some broad number, if we can get that what kind of asset turn or this defense in a longer term can have on an ongoing basis over next 2 to 3 years.
I think if you look at our current year, we have been around 509, and next year we are expecting that it should double, which is around 1,500 crores. And as we get more orders, like we have said, we will also give the next level of guidance in coming quarters. So let us wait for that time, and then you can do your own calculation on asset turnover and all that, because we don't run our business on those logics.
Okay, so I was just looking at if from a 1,500 defense for next year, and if we continue to maintain that run rate, are we planning to invest significantly in FY'26? Maybe the defense business may require an investment of 500 to 1,000 crore rupees, or it will be sufficient with the current investment, and after that investment in 26, 27 will be moderated at 300 to 400 crore rupees annualized number. That's what I just wanted to understand.
Okay. If you look at our last 5 to 7 years of growth, the cash accruals and capex programs, so it was quite clear that we were passing through a phase when cash accrual or business profits were less and capex program was on a higher side, which means that capex was more than the cash accrual. And if you look at our commentary of last couple of years, we have said very clearly that we are investing these things for the future business opportunities. And if you look at last year's number, our profits or cash accrual is more than what we invested. And if you look at 25 guidance, and we are saying that revenue should increase by 30%, and you do your own calculation on the EBITDA and profit, which will be not less than 40% growth, right? So if you capture that, and if you look at our capex program, now it has almost reached to around 65 or 70% of what we are accruing. So we have entered into another phase of our company's future capex program or strategic placement. So as we are moving up, we are announcing the capex programs, and definitely we will announce more as we move forward.
Fair enough, sir. Also, just last bit from my side, and so on a global market, sir, definitely we have seen that Nigeria and Turkey going through the tough environment, but apart from currency, have you seen that volumes have been impacted in this market, and in the current year, in FY'25, if you can give some sense that the newer markets where we have entered, Australia, Tanzania and all, last year, so how these markets are picking up, and any new markets you are planning to enter into the current year?
So I have already answered the similar questions in my earlier call, and if you look at the transcript of that, it is very clear that as far as business is concerned, international markets are getting impacted because of the higher interest rates, and higher interest rates resulting into the hyperinflationary situation in some of the markets. And because of these factors, hyperinflation is there, currency fluctuations are there, and lack of dollar availability is also there in some of the African markets. So these are the ground realities, and as we move forward, we think it should improve. And based on that, we have already said that our overseas business will do much better in FY'25. And I think that is enough kind of explanation on what is happening on the ground, what we believe, what we have achieved, and what we are going to achieve.
Sir, any comment on the newer markets you're entering?
We have already in the last quarter that where we are expanding.
Okay, fine.
Thank you.
So that's it from my side. Thank you so much.
Okay.
The next question is from the line of Manish Mahavar from Antique Stock Broking. Please go ahead.
Congratulations, Manishji and Team Solar. So just one question in terms of domestic explosive market perspective. What was the market size of explosive in India last year, FY'24, and our market share?
So we will do the test. Let us give us some time. We will do that working.
Okay, definitely. But industry have grown around 7-8%. That's you said, right, in the comment, one of the comments.
Yes.
Okay. And sir, maybe one more question. In terms of your overseas business, right, we have already been, I think so 2-3 years back, you said you will expand to 4 to 7 to 8 geographies. How do you see over the next 2 or 3 years from here on? We'll add further more 3-4 geographies, or we just wanted to ramp up this 7-8 geographies first from here on, sir?
Like we have already said that we are expanding our global footprint, and in line with that strategic decision, last year, a couple of quarters back, we said that we are entering into the Rajasthan market and Saudi Arab. So we are working on that direction, and very soon these two global market or countries will be on our map.
Okay, understood, sir. Thanks, sir. That's from my side. Thank you and all the best, sir.
Thank you.
Thank you. Due to time constraints, this was the last question. I would now like to hand the conference over to Mr. Amit Dixit for closing comments.
So thanks everyone. I would like to thank Manish sir and the management team for sparing their valuable time this morning. Thanks to all the participants for attending the call. I would like to pass it on to the management now for any closing comments, sir, that you might have.
Thank you so much, Amit. It was a very wonderful call. We expect our well-wishers to keep supporting us and boosting our confidence just the way. Thank you so much.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.